That's got about a minute left, and hopefully Robin will be able to join us as well.
Robin's here.
I'm here.
Oh, hi Robin, how are you?
Yep, okay, I'm fine, thanks.
It's good. Thanks very much for joining us as well. Where are you in the world? Are you in Vienna?
No, I'm in Dubai.
In Dubai, great. All right, well, we'll crack on. It's 7:30, so ladies, I'm going to start now. Welcome to the Daily Energy Markets podcast, where we take a look at what's moving today's headlines and ask why and what's next, especially OPEC's potentially major news this week. Is it a soft shift in direction? Is it a hard strategic handbrake turn? We're going to find out with our brilliant speakers. And also, what are the updates to the energy strategy in the UAE, OPEC's third biggest producer, which includes its national hydrogen strategy? So there's a lot to cover in the next 30 minutes. My name is Michelle Meinecke. I'm a director at Gulf Intelligence, and I'm delighted to be joined by Robin Mills. He's the CEO at Comarch Energy. Mike McGlone, he's a senior macro strategist at Bloomberg Intelligence, and Paul Hicken, he's the editor and chief at Petroleum Economist. So as dawn broke this morning on the last day of the 8th OPEC International Seminar in Vienna, the cuts by Saudi Arabia and Russia, as we know, the world's two biggest exporters, amounts to 1.5% of global supply and bring the total pledge by OPEC to 5.16 million barrels a day. Paul, you're on the ground. It'd be great to hear from you, the sense of the room and how you found the week. I believe you've been there since Tuesday.
Yeah, that's right. Well, it's been 5 years since the last seminar, COVID break in between. And it's been, they've come out in a real show of strength, OPEC Plus. It's not just in terms of the messaging, which was pretty much, on point from the Saudis, in terms of how much, they talked about not just standing, but growing. They talked about doing whatever is necessary rather than whatever it takes. They really upped the messaging in terms of that they aren't for turning here, that this extra million barrels a day, this extra 500,000 barrels a day Russia supply cut, not production cut, but supply cut. I mean, the Saudi energy minister talked up that supply cut and said, actually, it's a voluntary cut from Russia. They didn't have to do it. And the fact is that the supply is easier to measure. I mean, there's been a lot of cynicism from analysts in the market about whether Russia would actually deliver on its cuts. The evidence hasn't been there so far, but at the same time, this was OPEC Plus really suggesting that they are going to deliver. Whether the market reacts in that way, and Mike and others will probably share their views on that. But I think from talking to some of the analysts in the room and some of the others on the sidelines, it did feel like that everyone's waiting to see those deliveries. It's almost like OPEC Plus, despite the announcements, they're playing catch up. They pronounced production cuts for the extra lollipop in July and August, but the market's reacting to negative sentiment now. The Saudis talk about sentiment, but they're reacting to the negative sentiment now. I work as an economist, and you get the data, and then you revise your forecast, you downgrade demand, but the market's reacting ahead of that. It's a leading indicator, and it's reacting well ahead of where the data's going in demand and going well ahead of the Saudi and Russia cuts. So that seems to be the sort of two different moods in the room. But certainly, the OPEC, Saudi, and UAE talking about a bigger group. Even the Secretary General talked up that possibility about the dialogue of a bigger group and the show of strength they're trying to enforce. So there's certainly a strong messaging coming out there.
And Mike, from a bigger picture point of view, everything Paul's just mentioned about that show of strength, those two moods in the room, is essentially another step in the maturation as well of OPEC Plus. How do you think in a bigger picture that plays into the energy security, the energy trilemma situation that's going on, and how that's being balanced against the climate targets that are being made simultaneously at the moment?
Well, the bottom line for what you're hearing and seeing from OPEC is and OPEC Plus Russia and is very consistent with the bear market. And they're helping to drive it. Yeah. Because they're pointing out the obvious. We all know that crude oil and commodities are in a broad bear market on the back of the biggest pump in in prices in almost 50 years last year. Depends on how you measure it. And it's a hangover stage. The question is, where does it end? And I don't see it anywhere, any sign of it ending. This is just consistent activity to expect from a cartel with diminishing significance in the space. I mean, it might be 1/3 of supply. 10 years ago, they were closer to 40% of total supply, and the world is the world's largest customer used to be U.S. and now is the net exporter, and that country is heading towards a recession. And the Fed, virtually all central banks on the planet are still tightened. So I see a significant cat and mouse race here, and I don't see an end to it. So I typically people are probing for bottoms in the market, like, looking for the average price is expected to be lower this year. I don't see where it's going to come in commodities until you see some form of significant lag to Federal Reserve easing and a recovery from this recession in the U.S. That's probably going to start this year. Now, yes, that's the recession that every 6 months keeps going on, 6 months down the line. But we have the next meeting come out from the Fed on July 26th, and they're going to tighten. It's at 80% now. And that's the key thing, is it's a lose-lose. And also we have this situation where all risk assets bounced in the first half into a recession. Is good to me that on the 10 for crude oil is the stock market. Stock market rolls over, everything goes down. I think crude oil just follows the lead of natural gas, which went from 10 to 2 in the US and bounced. I still see crude oil on a path towards $40 a barrel.
Brilliant. Thank you, Mike. So opposing views to some degree there. We've got OPEC showing strength, proactive, getting ahead of the data, which in some ways, like I say, shows that those signs of maturation to a degree. And then we're sort of talking about, typical behavior from a cartel with diminishing returns, quote, which very, different sides of the coin there. Robin, where do you see it?
Well, we know the market's been in a bearish move for some months now, and it's kind of really interesting. And this kind of conflict goes on between the views of, say, IEA and OPEC, where, they remain pretty bullish on demand in the second half. We're now in the second half, of course. Let's see when this more bullish demand turns up. And the recession keeps being postponed, but so does the anticipated surge in demand. But the overall data, I think, is more mixed, right? It's you can see bright spots as well if you choose to look for them. And yet the overall positioning of the market is exceptionally short and exceptionally negative. But that gives us in a position where we could go down the road that Mike outlines, and that's a significant further drop in prices. Or if we had a bit of positive news, we'd see people liquidate the shorts, and we'd see prices go higher quite quickly. On the supply side, these cuts are obviously bearish because they're just signs that the Saudis and the others are not seeing the response in the market and having to make continuing cuts, and yet seeing virtually no response on the price. On the other hand, they are taking supply out of the market, and US production as well is strong, but next few months is likely to weaken as the impact of lower prices and all food inflation feeds through. So the supply side in the going out towards the end of the year is not as positive. But there's a lot of contrasting news, and I think it's really which ones does the market choose to focus on. And at the moment, it's focusing very much on the bearish things. We know sentiment can turn.
And with that, Paul, what impact do you think this is going to have on other OPEC, non-OPEC players going forward for the rest of the year? Against that background that yourself, Mike, and Robin have provided, what sort of plays do you think we could see in the last 6 months of this year? As we've spoken about, there's been that potential bullish tone that keeps being promised, the ever postponed recession, as Mike touched upon as well. Do you think that we could see other players taking action towards the end of the year? I know the UAE have said, we've done our bit. The others have generously stepped in. We've done our bit. We have no plans as of yet. But with OPEC and OPEC Plus members countries accounting for about 40% of global output, oil output, there's a big chunk of change being affected, and in turn, the dynamics of the energy security. So any step forward in the second half could have quite a big impact, especially around COP. What are your thoughts on that?
Yeah, well, I think from the June meeting, they really did iron out a lot of the difficulties around quotas for the UAE, which was a real stick in the craw for them, and adjusting those processes. Yes, it left some of the African producers slightly unhappy. But at the same time, I think it was everyone, ironing out a lot of those crinkles. Going forward, it's a big question because, like, if, as Mike outlined, if there is continuous bearish trend, and the question is whether does Russia deliver, then it's going to put strains on that relationship at some point down the line. Who knows how that will play out? But what I think is interesting is you're right. It's how quickly this bear market will potentially turn. When you're in a bear market, it's almost everything you do is kind of bearish. OPEC takes barrels out the market, it's bearish. It's Russia does supply cut rather than a production cut, it's bearish. China takes barrels China buys barrels into storage, it's bearish because it's not demand. And yet we talk the other side that, oh, storage is actually less barrels in storage. That's a sign of tightness usually. So there's a kind of, like, whatever you do in a bear market, it seems to be seen as negative. And that's where we're at the moment. I think it's been very hard for Saudi Arabia and OPEC Plus to fight that. And really, that's why they're sort of arguing more around bringing a price floor in rather than actually, stop the leakage, rather than actually provide any sort of bullishness. And yeah, we really don't know when that's going to turn, because it seems to be, everyone talked about a year of two halves. It now looks more like a year of 2023 and a bullish 2024 potentially, but who knows?
It's, as Robin was saying, it's almost the way one chooses to look through the prism of the market, which pair of glasses one picks up on the bull or bear side, and the narrative can almost be adapted to make either work to a degree, because that pendulum seems relatively stuck in the middle at the moment. I mean, Mike, what are your thoughts on these reports that underinvestments in oil and gas, the claims of the disastrous effect of that are exaggerated?
I enjoy those narratives that come out in bull markets. And then I remember 10 years ago was, we had peak supply, and it turned out to be peak demand in the US. Demand peaked over 15 years ago, and it's collapsing now compared to supply. I mean, that trend is overwhelming. But to me, it's what's happening with crude oil. It's so much of the global commodity. I mean, there's 70 countries that export crude oil. It's just the trying to narrow out the nuances of the supply and demand affecting prices. It's really not the matter anymore. And let me narrow down what typically takes to end a bear market is a lower plateau. Now, I use natural gas as an example. It's already done that. And it needs usually a factor with a weaker dollar and a macro, typically demand supply situation. And we're nowhere near that. So that's why I look at this as part of the biggest reset of our lifetimes. We in the largest country, and the one that matters the most in terms of when the Fed moves, we have significant inversion of the curve. We have major indications that's going to be in a recession. And the market's just starting to price that way. So I see this as a body in motion that's accelerating on the downside. And I love how Robin pointed out shorts. It's so true. That's what happens in bear markets. What you typically have to do is you have to rip out those shorts. I remember seeing it in the trading pits and with my customers, and then you go down. We've seen a lot of examples of that. But now we're just settling into that area. The market's very comfortable around $70 a barrel on WTI, just waiting for that next catalyst. And I don't see how it's going to be positive. Now, the thing is, typically what happens in bear markets, you have to rip out the shorts and it goes down. Now, if OPEC tried that with the cut a couple months ago, it did, and then it went back down. So I asked myself, what stops this? And I don't know. A key thing I like to point out, my key theme for this second half so far is, are risk assets cheap? We know the answer to that is no. And is the Fed and central banks accommodative? And both are no. We still have most central banks still tightening. So that's why the macro is bad. And then the bottom line is virtually all the data out of China continues to trend negative, or at least disappointing, I guess is the best way to look at it.
And when it comes, Robin, to these underinvestment claims in oil and gas, and that they're exaggerated, on one side, it's totally exaggerated. There's still a strong flow of funds. Everything's going in the direction it needs to have a relative state of energy security. That in itself being a dangerous phrase. And others saying, Shell's boss said in the last 24 hours, said an international bidding war for gas last year saw poorer countries, Pakistan, Bangladesh, unable to afford LNG shipments. There was instead diverted to Northern Europe, more and more children learning to work and study by candlelight, very much a hearts and minds moment there in his quote. So in a moment where big oil environmentalists are, rare moments in some cases, are on the same page. He's saying very much that it needs to be a just transition, not just for one part of the world, and that means stability of funds. So where do you see this in terms of the underinvest? This is a well-worn narrative over the last few years, but it still doesn't seem to have any kind of resolution about where we are in terms of is there a dangerous level of underinvestment in oil and gas still?
Yeah, look, this is a super complicated topic, and there's different bits of it to unpick. Let's look at the oil side for a start. Okay, so OPEC, as Mike reminds us now, has somewhat over 30% market share, but add in OPEC Plus in Europe, about 55%. That's a higher market share than OPEC on its own ever had. Now, OPEC Plus is not as cohesive as OPEC was at times, but anyway, as a group, it's more than half the market. If these countries really saw very strong demand ahead, they would all be investing very actively, you would think. And of course, the fact is that they're not. Saudi Arabia has some, it's relative to its reserves, quite modest expansion plans, and on a fairly extended time scale. The UAE has fairly aggressive expansion plans, which I'm sure we'll talk about in a moment. Iraq has plans, and Iraq will creep up, but Iraq has a lot of problems as well. And that's kind of it. None of the other members have significant and credible plans to grow production. And then of course Russia, is production is probably going to decline in the long term, the impact of sanctions and so on. So we're not seeing that these countries are investing very heavily into a very strong demand future. Now you could say that's part of the underinvestment, because OPEC OPEC very often blames underinvestment, and yet OPEC is in a better position to invest than anybody else. So I think it's just OPEC not really believing their own rhetoric on this. But then you look outside the OPEC Plus group, who are these people who are underinvesting? Where are the major oil reserves, that people are not investing in? US is still pretty active, and if prices are right, US production will increase, and we'll see investment. You've got the odd hotspots like Guyana, you've got emerging places like Namibia, but then you've got mature basins, and where honestly, is there a lot of room for new investment in the UK North Sea, let's say? No, I mean not really, no. And even if there was some investment, it would only be very, very marginal increase in production. Norway just approved, I think, 15 or 18 new projects. So Norway is one that has potential, and Norway is investing, quite actively as one of the mature producers. So it's kind of hard to see, where exactly is this underinvestment in oil outside the OPEC Plus group. If you talk about gas, no, I don't really see underinvestment there. We're seeing a very strong wave of new LNG coming on the market in 2026, 2027 onwards. And there's a decent kind of hopper of projects after that if the market looks good for the 2030s. Now everyone's supply demand balance is different, but I don't see a particular concern there not in the medium term anyway. So gas doesn't look too problematic. And then if you look longer term, I think the question is, okay, so where do you see longer term oil and gas demand going? Do you think that gas demand is going to continue growing out to the 2030s and 2040s, and that'll need to be a strong time for strong investment? Or do you believe we're in an energy transition world where demand is dropping very significantly? Well, we still have time.
That's certainly rhetoric, isn't it, Robin? That it's dropping, and that it's going to be tailing off. But as you say, the numbers don't necessarily always show that. Paul, from your perspective, do you think that this narrative of there's an as Robin just pointed out, there's where it's needed, there is investment, there is capital. Do you think that this narrative, this very much is increasingly being pushed? There's reports out this week saying the same thing, that there's it's fears over the money grab. It's more based on the fearful sentiment that level of cash is going to be going to climate action, whereas actually on the ground change hasn't been dramatically affected, or are you seeing something different?
I think there's probably two things we haven't touched upon, which is one, we talk about sometimes things from a Western prism, but actually, if you talk about where investment's going to be, it's not really blanket. What about Africa? What about some parts of South America? What parts of Asia? The perception of ESG and sustainability is very different. Some of the poorer communities there, people coming out of wood and there's still lots of coal in China and Indonesia and India still make up a huge part of the energy mix. So I think, you know, you have to be careful in terms of where investment may be, because there could still be a lot of investment in oil and gas, and it would still just go to some of these regions potentially. So until they make some huge leap forward in the technology that comes with the transition, and I think you know, when we've seen it was interesting at the OPEC Plus at the seminar yesterday, which was the fact is that this was a seminar that had, you know, huge panels devoted to gas. The whole day today is going to be on energy transition. You know, there is a lot of investment going on in terms of especially I think carbon capture and storage, you know, hydrogen, but carbon capture and storage is seen as the big one. And whether you can make big mass scale CCUS projects, because that would be a game changer for the oil and gas industry. You know, if you're really going to, if the world is serious about net zero, then realistically oil and gas is going to be a big part of that mix for some time, and getting it cleaner, more efficient, and the way we use oil and gas is going to be so much more crucial. And I think some of those debates still need to be had, as much as, you know, where renewables is going to come from, where do we get the clean energy from. So I think there's several parts of this debate that still are not quite on the same page. It's amazing that the IEA and the OPEC Plus haven't been on the same page and had these kind of schisms, because actually from the OPEC Plus, OPEC messaging and the IEA messaging is pretty much similar. We need oil and gas, but we need an orderly transition. And that seems to be the message, but getting there, and from policymakers, from the industry, it's a tricky one. And I think I just want to touch on one other key point in this messaging, which is rate of return. You know, the reason why a lot of these companies are not investing is because of the risk of stranded assets, the risk of what sort of return for investors as well. If the rate of return is there, if the prices are there, and you've seen this with some of the messaging from the IOCs more recently, is that actually, you know, BP, Shell, others have all said, you know, we need to keep shareholders happy, which obviously that's been a lot about ESG guidelines. But at the same time, there's also, if rate return is there, then you probably will see some more appetite in hydrocarbons, especially gas, because that's been a sort of political football in terms of, is it a transition fuel? Is it a hydrocarbon? You know, it is a hydrocarbon, it is a transition fuel, but how much can it be part of a cleaner mix as well? In terms
and one would argue that football game has been going on for way too long now. We've been having that same conversation about gas for several years, and the climate agenda and the rate of net zero just simply doesn't allow for this luxury of time. And I'd argue the same for CCS again, which I've been hearing about and is being lagging for years and years and years. But unfortunately, we have to move on to the survey now. Sorry, Paul, just looking at the clock. So this is a show and tell. This is a show don't tell oil market. It wants to see / feel supply cuts before a price reaction. So that's quite interesting. That's going over to what you were saying, Paul, about how the market in terms of that proactivity at the moment. So poll submitted. Thank you for your participation. As soon as we get those answers through, and then hopefully we can go over and talk about the UAE's national energy strategy. Ladies who organise this and have all the keys of power, if we could have the answers on the poll whenever you get a moment, that would be great. Mike, what are your thoughts on that survey question, please?
I wish there was an answer that I don't know. I honestly remember like taking the CFA and stuff. That was one of the ones I'd have to just guess. Now, to me, I think the key thing is that what Paul mentioned is technology. And I think all the get it. I mean, your typical oil executive now can drive a Tesla. 10% of auto sales are electric EVs, and in China it's 20%, and it's rapidly accelerating. I drove an EV, I bought one 10 years ago. They're great. So I think that's the key thing that's happening here. OPEC is just a kind of, it's becoming less significant in the midst of a paradigm shift. And people usually don't realize we're in the midst of a paradigm shift when you're in the middle of it. And then one thing I've really enjoyed hearing lately is 2 words: trust Russia. I mean, that's a complete oxymoron. And there's only one person anymore. It's Mr. Putin. It's like in China, it's Mr. Xi. The geopolitics here are very negative for oil prices in macro.
Trust Russia, yes. So these words are the 2 that you keep hearing quite often.
Oh, it's just, well, we know, and it's, in commodities, it's really, you learn commodities from China. Just ignore what they say, watch what they do. And Russia needs money. And what's the best way for them to get that?
Indeed. And also that's a good lesson for life, actually. Actions speak a lot louder than words, and we need to see that so much, not just with the energy security side, but also with the road to net zero and the climate action. Robin, fantastic. Show don't tell market wants to feel supply cuts before price reaction. 87% agree. Okay, great. Thank you very much for that, ladies. Robin, as we're nearing the end, I just want to get your thoughts on the UAE's updated energy strategy 2050, which obviously for a daily energy show sounds like a very, very long way away, but it impacts exactly what's happening right now in Vienna. It impacts what's happening with the national hydrogen strategy, the UAE wanting to become a primary exporter by 2031. It was 2030, shifted a little bit. Still very, very ambitious plans. What are your key takeaways from the news?
Yeah, well, look, I think the plans are that they're important, because if they show that a major oil producer can come up with some credible plans for decarbonising and while keeping its economy solid, then that's encouraging for others. And the UAE, along with a place like Norway, they probably pick those two out as leaders in this respect. That's a very important signal to others that this can work. If you look at the renewables plans, I think they're fairly moderate, to be honest. And if you look at the current plans that are already in process, and then this target of tripling renewables by 2030, they are well on the way to do that, and I expect they will exceed that by a considerable margin. So that I think they're leaving a bit in reserve that they can go. They know they can go beyond that. The hydrogen strategy is important. We've been waiting a long time for it, so it's obviously been delayed as they've incorporated new information, and it's a pretty fast evolving market. Now the principles that are out. That's again important. Okay, can major Gulf countries, North African countries as well, become major hydrogen exporters as another kind of pillar of their energy economy? So there is a strategy there. And I think really key part of the focus is that, okay, is exports, yes, but also how much will hydrogen be used in the domestic economy? There's a very big opportunity there as well.
Is that strategy as detailed as you would hope it would be? The reason I ask that is I've read over 35 national hydrogen strategies worldwide now, and the level of detail between them varies hugely. And some it's just a fancy name for a few pieces of paper. Others are far more advanced, and we know who the ones who are far more advanced are. From your perspective, how detailed is the UAE National Hydrogen Plan? Are you happy with, or are you confident that it's comprehensive enough to really give people the signposts they need in the market?
I think what you're seeing, to be honest, is tip of the iceberg, and there's a lot of stuff that is not public, but which lies behind this, which is not maybe gathered into strategy as such, but is there in terms of individual developments and projects. And I think the participants in the market know pretty well what's out there and what's available, where the opportunities are. Now, maybe there can be more of a public signpost in that regard, but I think the key players know pretty well what's out there.
And Mike, what are your thoughts on the timing of this release? Obviously Al Mazrouei is in Vienna. The UAE is a very front and center country for everything that's happening over in Vienna at the moment, and then the updated energy strategies released along with a long-awaited strategy on hydrogen, roughly within the same week. That timing seems very intentional. What are your thoughts?
Well, for me, it's a constant barrage now, and I think what most analysts are underestimating is how rapidly this technology is advancing, and how rapidly it's replacing. And here's one thing I enjoyed about hydrogen is I learned at a Bitcoin conference how easy it is for hydrogen to be put into a natural gas pipeline up to 30%. And hydrogen is one key fact for clean hydrogen, is one key thing that's pressured aluminum for history. It's a cost of electricity. That's collapsing now that we're getting past COVID, just with technology. I mean, I installed solar in my house 10 years ago. I have an electric car. That's really old technology. Just leapfrog back the next 10 years. This is what humans have always done with commodities. They find better ways to replace it and do things. And hydrogen is a massive, big thing. I also like to point out, when people talk about lack of investment in this country, we get almost 15% of our unleaded gas now from ethanol, from corn. I own a farm, and we still can barely break even for farmers with corn because the prices are low. It's just, the total amount of corn you could produce in an acre of land in this country has doubled in the last 50 years. That's just technology moving really fast. So I think the key thing to remember in commodities is always be involved, and certainly in energy, with the producers and not the underlying commodities. They will go down over time because of things that you're talking about. It's the wave is rising.
As a quick side note on that, with the US, the level of potential for hydropower is absolutely astonishing. We did an interview a couple of years ago, and along the lines of 95% of the hydro potential in the US is still untapped. If accurately and effectively used, it could provide up to 50% of the country's renewable energy. It's
What better incentive than a war?
well, there's going to be a war of water if we don't do something pretty soon. Mike, Paul, Robin, thank you very much for joining us. We spoke about how OPEC had a show of strength this week in Vienna. We've got Paul, who's on the ground in Vienna, so very much feeling the sentiment there. Talks about hangover stage, don't see it ending, typical behavior from a group with diminishing returns. Again, that's a narrative that we keep returning to as well, the ever postponed recession. Let's see what happens in Q2. Not sure. Paul mentioned as well about, maybe this will just be the year of not of two halves, but actually just the year of 2023, and 2024 is where we may see that pendulum move a little bit more. Mike saying about the oil body of market, the body of motion is accelerating on the downside, and Robin giving us insight there into the UAE's energy strategy and that long-awaited hydrogen detail as well. So very exciting to see what's going to happen with that, and also timing-wise, interesting in the lead up to COP as well. So we've run out of time. Mike, Paul, Robin, thank you very much, and have a good week.
Thank you.
Bye.
Yep. Thank you.